I think it's as ever, very hard to know what's going to happen over the next year. We have a lot of winds of change going through the economy, going to leave the European Union at the end of March. All kinds of volatility to do with America. The rate of growth out there looks very high. That may return back to trend. Not quite sure where the policies are going to be on world trade in terms of whether we end up in some sort of trade war with other parts of the world. Europe itself, even though it's surprised on the upside in the last year or so, there are straws in the wind that suggest that those economies may grow more slowly than they have in the past. And to add to that, there's those parts of the world that have been growing very fast over the last 20 years, the so-called BRICS, and we're not quite sure how they're going to respond to those higher costs of borrowing that the increases in the federal funds that we're seeing in the United States will bring about for them. We just don't know how those economies will respond. Yes, they have more foreign exchange reserves than they had in the past. Yes, their banking systems are possibly more robust than they were 20 years ago. And yet, they've built up levels of external debt and domestic debt to the kinds of levels that we saw before the financial crisis in 2007 and 8. So these are the kinds of uncertainties we're facing as the federal funds rate starts to rise, or has risen recently and continues next year. The UK in the middle of all that is a large trading nation, still the 5th or 6th largest economy in the world, but it's a world in which we think, because of the impact on external trade through leaving the European Union, the economy will continue to grow at less than its full potential, somewhere between 1.5 to 1.8%. The normal rate of growth in the UK economy is around 2%. It's going to be subdued. Now, there's a world in which, if we leave on disorderly terms, where we don't get the exit just right, it could be much worse than that. But the central case is for that kind of growth rate. And alongside that, if that's the case, we'd expect inflation to slowly come back to trend. It's slowly above target at the moment, about 2.4%. I'd expect over the course of the next year for it to return slowly to 2%. I'd expect unemployment to stay at around 4%. No real reason why it should move decisively one way or the other if the broad path of the economy is as I understand it to be or expect it to be. And alongside that, I would imagine interest rates, which are very low by historic standards at 0.75, could creep up a little bit at the rate of around 0.25% every 6 months or so. So by the end of the year, going to be something like 1.25 or 1.5%. That's the story I would think as the most likely story. But to be absolutely clear, that most likely story is not what I can firmly expect. I can see a lot of risk, particularly on the downside, if we mishandle exit from the European Union. The biggest opportunity facing the UK economy is really to think about tackling long-lived problems that the economy has suffered from, and that would be the so-called productivity puzzle, or I prefer the phrase productivity trap. Labour productivity is some 15 to 20% below where we might have anticipated it being some 10 years ago, and we need to think about how to deal with that. And the answers, in fact, are very well known. They imply addressing the problems of human capital. That means education in technical areas where possible. It implies helping firms or getting firms to think about their investment so it's more positive than it would otherwise be, both investing in tangible and intangible human capital, and where possible thinking about worlds in which the financial sector can respond to the demands of small and medium-sized enterprises to provide them with the financing they need to implement their own investment plans. None of this is new. This has been known for a very long time, but very much explains the underperformance of productivity compared to where it should be. And so what I would like to see alongside any smoothed exit from the European Union are some clear policies put in place to deal with this incredibly large productivity shortfall. I think the biggest challenge facing the UK is very much one to do with regional disparity. If we think about what the vote was about to leave the European Union, clearly the people spoke. It was telling us that many parts of the country were not in the place that they would like to have been or expected to be. And so when we look at the raw numbers, we see quite large disparities in regional income, large disparities in regional productivity. I include Scotland, Wales and Northern Ireland in that sense of the regions. Differences in wages, differences in life chances, differences in housing prices that lead to immobility of labour that makes it difficult for people to start and establish their lives in the way that they want. And that would seem to me the key problem for any national government to address is how do we bring about the equalisation of opportunities for households across the country.